Hey guys, so I'm away at the weekend, so I won't be able to do a normal Stock Saturday video, but it's sort of coming to the end of the tax year, and Steve D from the Playing Footsie show, get a plug in there, quality channel, go and check them out, suggested that I sort of do a bit of a review of the quarter and of sort of the tax year, basically. I did a sort of review at the end of December for sort of review of 2023, and yeah, nice to sort of see how I've done in the last quarter. So just sort of looking at my review of the year episode, we was at 216,000 for the overall portfolio, and taking today's portfolio because it's come down a little bit as expected with crypto's drop. I'm at 274,000, which so for the quarter I am, so what were we, 216? So I'm up 27% for, well, basically year to date. So pretty happy with that, considering S&P is up 9.7% and the Nasdaq is up again 9.46%. So yeah, pretty good, considering I sort of barely own any big tech, which is what sort of is driving the S&P and Nasdaq really. But my sort of exposure to something similar to big tech basically is the crypto side. So obviously CleanSpark is driving the bulk of this gain, 53.5% up for year to date, and yeah, that's the biggest part of my portfolio. So that is sort of making up for not having not having much of any big tech really. I could obviously just hold part CleanSpark and have the rest in sort of tech, but that's sort of very risky, and I prefer the value side of the portfolio. So yeah, for the quarter, I thought that was pretty good. And then on the year, so a year ago, well, yesterday, it was 164,000. So 274 over 164,000 is 67% up for the tax year, basically. So a year ago, again, Nasdaq was up 37.7%, very strong year for the Nasdaq. S&P not quite so much as expected, but 26.12%. That's an extremely strong year for the S&P. Would normally be sort of measured in calendar years, but that's 1 year return. Don't suppose it'll be too much different if you're sort of measuring calendar years. 2023 on its own was, what were we? So end of December, yeah, 22.46%. So yeah, not all that much different. So yeah, there's been a number of sort of standout stocks for the portfolio. As I say, CleanSpark has been performing remarkably well, but it's not just them. We've also had Stellantis, so year to date 19.37%. That's the biggest holding in my invest account. That's been doing really well. And for the year, 51.51%. So very strong, outperforming even the Nasdaq. So very happy with that. Not something that I'm wanting to sort of take profits on, just sort of letting that run at the moment. I guess a failing has been selling things like Meta platforms. So I sold that in sort of June time around 288, and obviously that's up 73% since then. Even just year to date, 43.58%. So only CleanSpark basically is beating that from my portfolio. So bit of a shame to be selling that. As I say, that's me not having much of any tech, and sort of Meta being one of the better performing tech stocks outside of maybe Nvidia. So yeah, I guess if there's a bit of a lesson, just sort of looking back at the 1 year ago portfolio, I do sort of see Meta there at sort of 211% at a sort of 10% profit. It did go much higher than that. But also Broadcom, $641. Obviously, that's now 1,331, so over double that. See some other bits and pieces like BP and Porsche that I no longer hold. Don't seem to be too much lost from getting rid of those positions. Some of the obviously this account was at 92,000 and it is now 79. Part of that did come out and go into the Interactive Brokers account to be spent on options, which I will come to shortly. But yeah, I think sort of the stocks that I've held in there, being sort of mainly Stellantis, Broadcom, TSMC, and the Vanguard Emerging Markets Fund and Prosus, I'm sort of fairly happy with. They've all performed reasonably well. If anything, I'm still sort of up in the air as to what to do for the tax year. Sort of wondering whether to maybe just leave it until after the tax year and switch some of this account into the ISA and maybe sort of buy something like Riot Platforms on the drop. Sort of seeing whether it lasts until Monday. I was sort of considering selling some Bitcoin and putting that straight in the ISA, but it would mean that I'm sort of out of the market for quite a while, and I'm only really doing it sort of for tax reasons. So I could end up sort of trying to save £1,500 in tax and losing a lot more than £1,500 in terms of missed gain. So I would like to try and accomplish it pretty much all in the same day if possible. So yeah, we'll see. But yeah, on the invest account side, that's sort of about it really. I wouldn't say too many sort of lessons to learn from that. Most of my stocks have been sort of doing okay. The mining side, sort of in Rio, Vale and Glencore have sort of been doing reasonably well. Vale's sort of a bit worse off than the rest. I am sort of still focused more on the copper side than the iron ore side. So Rio and Vale, not really something I'm looking to top up anytime soon. It would be sort of Glencore, if anything, out of these three, and sort of, if not more, the KGHM side on the Interactive Brokers side. But I don't really want to probably be using the Trading212 ISA for the next tax year. Going for, as I say, probably more Riot Platforms. So yeah, that's the invest side. Just looking at the ISA side, as I say, CleanSpark, sort of the performer for the last quarter and the last year. But it's not just CleanSpark. I do have to give a shout out to the gold and silver miners. They've really started to pick up in the last few months, sort of this year really. Equinox Gold as a sort of standout performer, about nearly 35% up year to date, where again S&P both just under 10% for the year. On the yearly, it's not done quite so well, but 19.89%. So a little under the S&P and quite a bit under the Nasdaq, but quite a large part of my holding is on the options with these, and with price starting to rise rapidly, those options are sort of very, very rapidly going up. I think one set is about 75% up, and some of them are about 150% up. So that sort of gives you the parabolic nature of options once the price starts to go up, and that's why I've sort of taken them as a high risk reward option. Obviously, sort of buying throughout the last year really, and sort of price not really going anywhere, but all it takes is sort of a couple of months really of it things starting to pick up for yeah, for the options to start doing really well. So have to give a shout out to those. They're becoming two fairly large positions, and then Fortuna as a smaller position. Although them at $4 is not to be sniffed at, so that's not too bad. The REITs, I would have to say, haven't really got my focus particularly at the moment. I sort of had a brief look just to see how they've been performing, how they're looking going forward, and they sort of look okay, but it is just sort of okay returns. I can't see prices rocketing too rapidly unless we get sort of major rate cuts. So, it's maybe sort of 5% price gain on the sort of bullish side and 5% yield. On an ordinary year, that would be seen as great, sort of 10% overall return. But I don't think this sort of next year or so is the year for okay returns. So I am potentially looking to take a bit of cash out of those. I won't say take profit because most of them are in the red. Take a bit of cash out of those and potentially look at, again, Riot Platforms, sort of something a bit more on the growthy side. I do think this sort of coming year certainly is the time to be maybe going a bit higher risk and sort of trying to make as much money as we can before the inevitable sort of recession / AI boom where we all lose our jobs. Have to see. And my little 2-stock ISA with Pan American. Pan American's starting to look reasonably good, but it's sort of been lagging behind the others. Still sort of at $15. Did drop down to sort of 13s and has come back again, but needs an awful lot more work done. They're sort of selling off less sort of core holdings in terms of their mines and consolidating, but yeah, still a fair amount of work to be done. KGHM as well, sort of going through a bit of mine troubles at the moment, but still looking reasonably good. Their sort of 50 million ounces a year of silver is starting to look really promising with the silver price. So yeah, all looking pretty good. And on the invest account side is sort of where I'm pretty optimistic, although I'm sort of not really putting any cash to work at the moment. Sort of really on the basis that CleanSpark has obviously started to run. We're sort of in the 15, while it's in the $15 to $20 range, the options just don't look appealing at all. You're sort of looking at, if the price does a 3 or 4x, then the options might do a 6x, and that's sort of not appealing at all. It's not worth the risk. I'd rather just hold the stock itself. Obviously, I get taxed on these, so I want a much bigger return for those for taking the risk of these being worthless, of course. And then on the gold side, you're sort of starting to get similar returns, really. Certainly with Equinox, these have sort of shot up. I think these Equinox and Coeur Mining are both sort of in excess of these returns now, so they are starting to sort of show maybe not such good value. So not wanting to sort of deploy this 2,000 into those, even if I do think the stocks have still got a lot further to run. The only one that is sort of hovering around my average buy price and sort of a reasonable potential price is Himax, but obviously we've got China sort of in recession, although sort of printing money as well and potentially easing. I am wondering whether to sort of maybe go a bit more risky, but having already sort of sunk a reasonable amount into that, I'm not sure I want to sort of take it too much further than it is now, but I don't know. We'll see if I can get maybe some good news out of them and the price doesn't move too much, then I might go a little bit further. And then Fortuna, I haven't been sort of buying at all really, mainly because they sort of have less of a long-term future of their mines. The sort of silver side is pretty much winding down, and some of their gold is as well. So yeah, I kind of like the sort of Kua Mining and Equinox a lot better than those two. But I am on the lookout for any sort of underloved gold and silver miners that sort of haven't really run yet, and the options might be pretty good value. So certainly leave your any suggestions in the comments. But yeah, that was sort of a brief rundown. Just sort of see, how far we've come compared to sort of the end of year review. It's not really all that much changed. I guess a big lesson I've learned is anything sort of 3x short is not to be looked at all, really. You could say, obviously, I went for Nvidia. That was never going to turn out well, and I went for 3x short Nasdaq, sort of as a small hedge, I guess. It wasn't the worst thing in the world that went to zero, because I suppose you could say, I was heavily long the crypto side, and yeah, they basically sort of negatively correlated, I suppose. So that going to zero and the crypto rocketing up isn't the worst thing. But yeah, I think I get the impression sort of 3x short anything is just a really risky move unless you know something is potentially sort of rocketing down in the short term. So I think I'll probably be staying away from those. There is a possibility of sort of maybe using the 2 or 3x long products, sort of holding longer term and just accepting that, in the 3x maybe you get 2x the return of something, and just sort of accepting that that doesn't quite do the 3x. But yeah, still weighing those up. The sort of 2x aren't quite so bad. There's a bit less volatility on the downside, so you don't get quite so much decay from the sort of 2x. So I guess the more I look back at past data and sort of see how things have changed and sort of how certain things have performed, I guess I need to sort of learn to leave things the way they are. I mean, a lot of things that I've sort of got out of have moved on to do pretty well. Sort of Micron, that's sort of done well, very well considering where I sold it. Alphabet, I sort of sold, and that's moved on pretty well. Maybe not quite as much as some of the others, things like Meta, but it's still done okay. Volkswagen sort of not really moved too much, so that's probably not the best example. Nintendo rocketed up after I sold that. I think that's more to do with currency than anything else, so that's maybe a bit of a gamble. But yeah, sort of looking at things like obviously CleanSpark and the gold miners and that sort of thing has been a success. But I would say in the invest account, that's where it's fairly obvious. Stellantis and Broadcom and TSMC, things like that would have been very easy to sort of take profits. People have these arbitrary goals. Sort of once you get to 100%, take 50% out, and that's your cost basis. And then you sort of, the painful phrase that people use, I suppose, that you're playing with the house's money, which I don't really like. It's not the house's money, it's your money. If you lose it, then you've lost your money. Just because it was unrealized gain isn't really anything to sort of take solace from. So yeah, I kind of think look deeply into fundamentals and balance sheet and how you think they're going to perform, and let things run. I guess they're not all going to be successful. Obviously, I've got Hymax still sort of languishing, some of the miners still languishing, but that's sort of to do with commodity prices, which aren't always going to go your way in the short term. But yeah, you have to wait. Obviously, the gold and silver miners, I've waited quite a long while, and they've started to show promise now. So yeah, I guess the sort of let your winners run idea is sort of more and more true. So maybe I will try and continue doing that. You just have to keep monitoring whether things are getting overvalued You know, things like Broadcom, I sort of continue looking at price to earnings, sort of forward price to earnings, you know, what sort of tech they're getting into, what they're doing with the cash as well. Sort of, if companies are just doing a load of buybacks to try and increase the share price, then that's not really good. You want them sort of reinvesting for future gains. And yeah, that sort of, as I say, that phrase of don't water the weeds and be sort of buying things based on arbitrary sort of how much you're up or down. It should be fundamental based, and yeah, don't really care sort of how much things are up or down. So yeah, I think if there's any more you think I should be sort of focusing on, or anything you've learnt from sort of reviewing your own portfolio, leave them in the comments below, and we'll see how things are doing on Saturday. So like and subscribe, and see you soon.